Rise and grind, trading family. Your boy Wildcard is coming in hot, and I have to come clean right out of the gate. The board had oil at $99 this morning. The board was stale. The war was not. Israeli and United States forces struck Iran again overnight. Trump rejected a ceasefire proposal. That rejection is what sent oil past $110. Your boy almost walked in here, quoting 99, while supertankers are dodging missile fire in the Strait of Hormuz. That is not the show we are running.
Quick reminder before we go any further, nothing we say is financial advice. Two traders reading data at 5 in the morning while an actual war is running. Do your own research.
We got bombs, we got AI billions, and we got the biggest Wednesday of the second quarter all stacked up at once. This is the collision. Let's get into it. Oil is sitting at $110 and change as of this morning. The trigger was Trump rejecting a ceasefire proposal. Oh, stop. The first Japanese crude supertanker is attempting to exit the Strait of Hormuz since hostilities began. One ship trying to move. And it is news. British Petroleum, BP, profits doubled. The war dividend is real. Big oil is printing while everybody else is sweating. This is my ceasefire rally trap thesis, hitting confirmation number 6 or 7. Every peace signal since April 2nd has reversed. Every single one. I have been on the other side of that trade every time.
And the physical market is worse than the paper market. That's what people miss when they just watch the price. 8 weeks of cumulative supply chain damage. The Hormuz throughput numbers have not recovered. The degradation is not linear, it compounds. Iran's foreign minister flew to Moscow. Not to a negotiating table. To Moscow. Lebanon's ceasefire expired Sunday. Both parties believe leverage is theirs. That's not a negotiation. That's a standoff.
Before we get into the money side of this, we have to say something. At the White House Correspondents' Dinner this weekend, a man named Cole Thomas Allen was taken into custody. 3 federal charges. The president and officers were safe. That happened. It matters. We say it once, we move on. There's no place for that in stock picks. Okay. Segment 2. The same 24 hours the escalation happened, the AI world decided it was time to go absolutely nuclear on capital.
Amazon, AMZN, committed $50 billion into OpenAI. NVIDIA, NVDA, committed $30 billion into OpenAI. Oracle, that's ORCL, signed a $20 billion AI cloud deal with Meta, META. $100 billion into AI infrastructure. Deployed the day before those same companies report earnings.
That is one of the most insane single days of capital deployment I have ever seen.
The Norway Sovereign Wealth Fund, $2.2 trillion in assets under management, run by Nikolai Tangin, made 2 statements this week. 1. AI capital expenditure is highly sensitive to any wobbles. That is an institutional warning shot. 2. They posted a 20% productivity gain last year from deploying AI internally.
That's the tension right there. They're warning you it could fall apart and telling you it already works.
Is the capital proportional to the returns? That's not an anti-AI take. The productivity gain is real, but is 100 billion in a single day proportional? That's the only honest question.
Meanwhile, NVIDIA hit a new all-time high this morning. First time since November 25. Alphabet, ticker GOOGL, also at all-time highs. Micron, MU, up nearly 5%. My target on Micron this week is $550. The AI trade is screaming. The market is voting. Yes, this is real. Put the money in.
But earnings have to confirm that Wednesday. The setup doesn't hold if the guidance disappoints.
Which brings me to what's been living in my head since the ServiceNow report. ServiceNow, ticker NOW, they were honest about their Middle East exposure. Beat on earnings. Tanked 14%.
The market made them pay for it.
Meta and Microsoft, that's MSFT, both report Wednesday afternoon. And I am sitting here asking, have they learned that silence gets rewarded? Or Are they going to tell their investors the truth about what the Gulf is doing to their numbers?
That question doesn't have an answer yet. That's what makes Wednesday the most important print of the quarter.
All right, semis. Let me tell you why the semiconductor sector is different from everything else right now. The United States government owns roughly 20% of Intel, INTC. That's the floor. That's why Intel ran 23% last week. That's why Advanced Micro Devices, AMD, jumped $43 on a competitor's earnings print. When the federal government backstops your supply chain, the floor moves with the policy. 19 straight green sessions in semiconductors. 19. The hardware rotation is not a thesis anymore. It is industrial policy.
And then there's Shin-Etsu,
Tell them.
Japanese semiconductor materials company. They withdrew their annual outlook this week. Reason given, Iran war disruption. The Hormuz chain runs directly into chip fabrication. The United States government backstopped Intel's balance sheet. Nobody can backstop the wafer pipeline when the lanes are closed.
Both things are true at the same time. That is the terrifying part of where we are right now. And I'll own where I'm sitting. My system holds Broadcom, AVGO. I am down $433 on that trade. Stop is at $398. Right thesis. Wrong entry timing. The stop does its job if it needs to. I don't second guess the system. 89% cash outside that one position. Watching.
My Rambus position, ticker RMBS, is worse. Entry was $158.53. Around $117 right now. Down about 26%. Multiple tranche exits, all below entry. That's the plan working. Methodical losses, not blow-up losses. This is the 13% of an 87% win rate showing up all at once. I own it.
2 systems. 2 underwater trades. Same theme, different names, same pain.
There's also Poet Technologies, ticker POET, down 44%. Marvel Technology, MRVL, canceled their purchase orders after a confidentiality breach. 19 green days in the broad sector doesn't make every name safe. Company-specific risk didn't vanish because the tide came in.
The $100 billion in AI deployment says the direction is not wrong. The demand is real. It's the timing and the entry that's wrong for both of us.
That's the honest read.
Wednesday. Powell's last Federal Open Market Committee meeting as Fed chair. Rate hold is locked. You cannot cut into $110 oil with core personal consumption expenditures at 3%. That math does not work. Full stop.
But the language matters more than the decision itself. Any hint about Warsh's direction, any acknowledgement that the war is feeding into inflation, that moves bonds. Kevin Warsh is watching from the wings, ready to drop personal consumption expenditures as the primary inflation gauge entirely.
And then, same afternoon, Meta and Microsoft report. The Now test. Live. Both companies laid off a combined 22,000 workers the week before earnings. That is narrative management. They are shaping the story before the story gets told.
If they beat and stay quiet about Gulf exposure, the don't be honest playbook gets validated across the entire market. Every chief executive watching those prints learns the lesson.
Silence gets rewarded. Honesty gets you a 14% haircut on a beat.
If either one acknowledges Middle East exposure, the ServiceNow contagion spreads. Stocks that beat but flagged Gulf headwinds get repriced lower. It's a live test of what the market demands from management.
That $100 billion in AI capex looks completely different Thursday morning depending on what Zuckerberg and Nadella say Wednesday night. One press conference. Completely different story.
Here's what I keep thinking about, though. What if Wednesday doesn't resolve it?
What do you mean?
What if Meta beats earnings and oil holds above 110? What if both stay true at the same time? Risk on equities. Wartime energy prices. A Federal Reserve that literally cannot move. That's not a collision that resolves. That's the economy running in two directions at once. Wednesday might not be the answer. It might just be the next data point in a problem that doesn't have a clean resolution.
That is the most unsettling thing you've said on this show. And you have said some unsettling things.
I know.
All right, here's what we're watching. The SPY is sitting on triple top resistance at $714.50. Something resolves that level this week, one way or the other. Tesla, TSLA, testing $365 support. Bleed day 3 post-earnings. Watch that level hold or break. Visa, V on the tape, reports today. That is your consumer health check before the big prints. General Motors, GM, reports today with the wartime production angle. Two very different reads on the same American economy.
Those prints give you signal before Meta and Microsoft go Wednesday night.
My system, 89% cash. One position in Broadcom. Stop in place. I am watching, not frozen. Selective, not scared. The system earned the right to be cautious right now.
My system, 9 open positions, 4 new entries today, 307 signals passed over. It's having a bad month. Not an identity crisis. It's doing its thing, and I trust it.
That's the honest version of both of our positioning going into the most important Wednesday of the second quarter. Here's what I know. There's a collision happening in this market. Oil and AI pulling in opposite directions. The bombs are real. The billion-dollar bets are real. Wednesday is when we find out if the market can hold both of those things at once, or if one of them finally folds. Know your levels. Know your stops. Know which side of the collision you're on and why. For the trading family, don't check your positions tonight. The answer isn't there yet. The answer is Wednesday. Wild card out.